Let's kick things off with a pretty wild number, 169. That is exactly how many independent municipalities you have to navigate when you're dealing with real estate in Connecticut. You might be wondering, why so many? Well, it's because the state has absolutely zero functioning county-level government. They actually abolished it way back in 1960. So whether you're a real estate investor, a prospective homebuyer, or just trying to budget for a new property, you aren't dealing with one centralized county tax assessor. Nope, you are dealing with 169 individual tax fiefdoms.
Welcome to this explainer, where we're going to decode this crazy localized maze of Connecticut property taxes. It's an absolutely crucial topic if you own or plan to own property in the state, mainly because Connecticut has the second highest median real estate taxes in the entire U.S. We're talking a massive $3,276 per capita. Understanding how this works isn't just fun trivia, it literally impacts your legal responsibilities and your bottom line.
Here is our game plan for today. We'll start with the Connecticut tax maze, then move into decoding assessments and mill rates. After that, we'll do a step-by-step address lookup, cover some practical tips and common pitfalls, dig into delinquent taxes and legalities, and finally wrap up with additional resources and next steps. All right, let's jump straight into Section 1, the Connecticut tax maze, and why local rules everything. Since there are no counties, every single town is completely on its own. They establish their own assessment rolls, set their own rates, and keep completely separate databases. And the financial stakes here? They're huge. Local governments in Connecticut rely on property taxes for a whopping 59% of their general revenue. Since they don't have broad county money to fall back on, that heavy financial burden lands right on the shoulders of local property owners. Moving right along to Section 2, decoding assessments and mill rates. Basically, the math behind the bill. Before we go clicking around online looking at bills, you really need to know what you're actually looking at. You can't just guess taxes based on market value. It all starts with something called the Grand List. Every town puts together this comprehensive annual inventory of all taxable property. We're talking real estate, business personal property, and yep, even your cars. It's all assessed uniformly as of October 1st every year, and this list forms the entire foundation of your tax bill. Okay, so how do they calculate the actual dollar amount? That brings us to the mill rate. A mill rate just means you pay $1 in tax for every $1,000 of your assessed property value. The math is beautifully simple. Take your assessed value, divide it by 1,000, and multiply it by the mill rate. Now, here's a key detail to keep in mind. Almost everywhere in Connecticut, properties are uniformly assessed at exactly 70% of their fair market value. So a $500,000 home is assessed at $350,000. But there's always an exception, right? While most of the state follows that strict 70% rule, the city of Hartford does its own thing with a split rate system. Because Hartford has high municipal costs and a smaller commercial tax base, they actually protect homeowners by assessing residential properties at just 36.75% of market value. Commercial properties, on the other hand, get hit with the full 70% ratio. It's a fascinating contrast. Let's talk about how much those mill rates can vary because it creates a completely different reality depending on your zip code. Mill rates are set locally, meaning you might see a rate under 15 mills in a wealthy town like Greenwich, but then you cross over into Hartford and you're looking at nearly 69 mills, or over 40 in Bridgeport. To put that into perspective, two identical homes with the exact same market value can have wildly different tax bills just because they sit on opposite sides of a town line. Let's put this into practice in Section 3, step-by-step address lookup, and navigating the portals. Remember how I said there's no central state database? Yeah, that means you have to follow a specific 3-step process to find a property's info. First, you need basic info like the address or owner's name, but you must identify the exact municipal jurisdiction. Mailing addresses in Connecticut can be incredibly misleading. Second, you search that specific town's CAMA database. That stands for Computer Assisted Mass Appraisal. And third, you use local GIS mapping tools to verify. Let's see what this looks like in the real world. Depending on the address you're looking up, your workflow changes completely. For example, if you're looking up a house in Hartford, you're going to use a system called Patriot Properties for the CAMA data and Search IQs for land records. But if that house is in New Haven, you're using Vision Government Solutions and a portal called COT Record Hub. It's like a giant puzzle where you have to figure out exactly which software vendor your target town happens to use. Now, to make this whole process a million times easier, you really want to lean heavily on visual GIS portals. Tools like Axis GIS or MapGeo are amazing. You literally just find the property on a map, click the parcel,
and it usually links you straight to those scattered assessor databases. A great place to start is the Connecticut Statewide Parcel Viewer on the state's Geodata portal. It puts all those local parcel boundaries into one handy statewide map.
Which brings us to Section 4, Practical Tips and Common Pitfalls. Let's talk about due diligence. Now that you know where to find the data, you need to know about the hidden traps that catch so many new buyers and out-of-state investors totally off guard. First, Connecticut requires towns to do a revaluation every 5 years. If you buy a place in year 4, be prepared for your assessed value and potentially your tax bill to jump in year 5. Second, don't forget that Connecticut taxes your cars annually based on the local mill rates. And third, watch out for Public Act 490. If you buy land classified as farmland or open space, it gets a massive tax break. But if you decide to develop it, you could face a huge conveyance tax penalty that claws back up to 10 years of those savings. Moving to Section 5, Delinquent Taxes and Legalities, or the true cost of missing a payment.
So what happens if you mess this up? What if your tax bill gets mailed to the wrong town, or you just miscalculate your budget and fail to pay on time? Well, you face a staggering penalty. Under Connecticut law, delinquent property taxes get hit with a massive 18% per year interest rate. That breaks down to 1.5% every single month. And the math here is completely unforgiving. By law, if you make a partial payment, the town takes that money to pay off the accrued interest first before it ever even touches your principal tax debt. Plus, in many cases, being late by just a single day or a fraction of a month can trigger a full month's worth of interest. It is a strictly enforced system, so budgeting correctly and knowing your legal responsibilities is absolutely crucial. Finally, let's wrap up with Section 6, Additional Resources and Next Steps, so you can protect your investment. With the stakes this high, you really need to use the right tools. You don't have to do it the hard way every time. Third-party aggregators can be a real game changer here. For example, a platform like RegWatch lets you search CAMA and Grand List valuations across all 1,699 towns from one single search bar. There's also the Connecticut Town Clerk's Portal, which gives you access to land records for over 70 municipalities. But remember, if you want the absolute, undisputed truth, you go straight to the local town tax collector and clerk. Which leads us to our final takeaway. With 169 different tax fiefdoms and strict 18% penalties hanging over your head, are you fully prepared to verify your property data? Keep in mind, because property tax processes vary so much by town in Connecticut, you should always consult the local municipal office or a local tax advisor to figure out your exact obligations. Always verify your information from legitimate sources and stay updated on changes in your area. Thanks for joining us for this explainer, and don't let the Connecticut property tax maze catch you by surprise.